and gentlemen. On behalf of Dolat Capital, I welcome everyone to Mahanagar Gas Limited Q3 FY24 earnings conference call. We have the pleasure of having with us senior management team of Mahanagar Gas Limited, represented by Mr. Ashu Singhal, Managing Director, Mr. Sanjay Sende, Deputy Managing Director, Mr. Rajesh Patel, Chief Financial Officer, and Mr. Rajesh Wagle, Senior Vice President Marketing. We shall begin with the remarks from the management, followed by the question and answer session. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in the nature, and we believe that expectations contained in the statements are reasonable. However, these statements involve a number of risks and uncertainties that may lead to different results. The risks related to these statements are included but not limited to fluctuations of sales volume, foreign exchange, at the cost of ability to manage the growth. I urge you to consider that quarterly numbers are not a reflection of long-term trends or indication of full-year results. They should not be attempted to be extrapolated or interpolated into a full-year number. In case of any queries, please feel free to get in touch with the EY Investor Relations team. With that said, I will now hand over the call to management. Over to you, sir.
To you, I am Ashu Singhal, MD, Mahanagar Gas, and I welcome all of you to the earnings call of Mahanagar Gas Limited for the third quarter of the financial year 23-24. I would like to thank all of you for attending our call today. MGL continues to create CGD infrastructure across its licensed areas. During the quarter, 118,215 domestic households were connected, and thus we have established connectivity for nearly 2.37 million households. We have laid 90 kilometers of steel and PE pipeline during the quarter, thereby taking the aggregate length to 6,742 kilometers. We have added one CNG station during the quarter, and with this, we have 320 CNG stations as on 31st of December. We have also added 98 industrial and commercial customers during the quarter, and thus have 4,691 customers as on 31st December. In respect of our Raigad GA, we are connected to 75,432 domestic households and 32 CNG stations are currently operational. During the quarter, we have laid 11 km of pipeline in Raigad, thereby taking the total length of pipeline to 404 km in Raigad district. This expansion of our pipeline network has created a very good ecosystem for the CNG and PNG system in the Raigad area. The first CGS and the first mother filling station at Savroli in GA3 has been commissioned, and this will now enable expeditious unlocking of the demand in Raigad. During the quarter, MGL has commissioned its LNG station at Savroli, and LNG sales to B2B customers has also commenced. Coming to MGL operations for the third quarter ending 31st December 23, compared to the corresponding quarter of the last year, at company level, average gas volume sales has increased to 3.671 MMSCMD from 3.412 MMSCMD, which is an increase of 7.6%. Sales volume in the case of CNG has increased to 2.632 MMSCMD from 2.474, which is an increase of 6.38%. In case of industrial and commercial, sales volume has increased to 0.508 from 0.439 MMSCMD, which is an increase of 15.84%. Sales for domestic PNG has increased to 0.53 from 0.499 MMSCMD, which is an increase of 6.37%. The current 9-month quarter EBITDA is rupees 1449 crore compared to previous year's 9-month EBITDA of rupees 794 crore. That is an increase of 82%. Net profit after tax for the 9 months is rupees 1024 crore compared to net profit after tax for previous 9 months of rupees 521 crore. Net PAT is rupees 317 crore for the quarter as compared to rupees 338 crore in the previous quarter. I'm happy to announce that Board of Directors has also approved an interim dividend of rupees 12 per equity share for the current financial year. In December 23, MGL signed a MOU with Mitsui O.S.K. Lines for production and utilization of hydrogen-associated products and LNG for various applications. During the quarter at the prestigious Governance Now Awards, MGL has been awarded in two categories: IT Infrastructure Excellence for being the first CGD entity moving to AWS cloud-based servers, and Digital Transformation Leader Award for providing better customer and vendor experience under PSU IT category. We continue our initiative in environment, safety and CSR. MGL has also been awarded the Mahatma Award for working on maximum number of sustainable development goals. Under the banner We Care, MGL has touched 14 out of the 17 SDGs, impacting the lives and livelihood of marginal communities. With this, I conclude and would now like to open the floor for questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while question queue assembles. The first question is from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you very much for the opportunity, sir. Good evening. Congratulations on a strong set of numbers. I had 3 questions. One, the kind of volume, this is obviously a 5-quarter high in terms of the volume growth that you have reported, and I know you do not like to comment on quarter-to-quarter volume fluctuations, but just directionally, can you just let us know what are the primary reasons why volume growth picked up this sharply in this quarter, and what can we actually expect over the next few quarters? Whatever view you can give us. That's my first question.
Well, volume growth is, basically driven by CNG. If you look at the current year quarter versus previous year same quarter, CNG I think has grown by about 8% in kg terms, and there has been a high double-digit growth in our industrial volumes also, almost exceeding 20%. So these two are the major contributors. On the industrial front, we have managed to add some new large industries consuming a high quantity of gas. We had launched some schemes a few months back where above a certain volume we had started giving them a discount for some fixed time period. So now those customers have come online and started contributing to the volumes. CNG, hopefully, the difficult times we're hoping are not past us, all the pricing troubles and, availability troubles. So there also the market is now looking up. And we are having a slow but steady increase in MSRTC buses, which, a few hundred of them are another 300 or 400 will be joining in the next 4-5 months. So that is helping, and going forward we are again hoping for some increased traction in the commercial goods vehicle segment where the contribution per vehicle is relatively high.
Right. So just as a follow-up there, sir, what's the kind of vehicle conversion run rates we saw per month in this quarter?
This quarter, total vehicles added is around 22,400. Okay. Just to add what Mr. Wagle said earlier, one of the contributors to the volume is also increasing trend in the number of vehicles getting added. First quarter was 15,000, second quarter was almost 20,000, and now it is almost 22,000. So cumulative effect of all this is seen in the volumes.
Yeah, there is an uptick in the commercial vehicles, from about 1,100 to 1,400, and even in the
private car segment.
Of course, private car individual contribution is not much, but every little bit helps and has built up the volume.
Sorry, sir, for commercial vehicles, you said from a run rate of 1,100, 1,200, that's on a per month basis, or this for the entire quarter, is it?
So that's for the quarter.
So in the beginning, it was 1,100 odd in Q1 maybe. Now it's gone up to 1,400. Did I understand you correctly?
Yes.
Just one more question, if I may, sir. Thank you for the details. On the margins front, just wanted to understand what sort of spot LNG was consumed this quarter as a percentage of our total sourcing, if at all?
Roughly 2% plus spot. When I say spot, that includes, spot RLNG as well as sometimes through IGS, HPHT as well. So it's not completely spot means RLNG spot.
And that was
used mainly for peaking requirement, around 2% plus.
2%. And the rest is all now tied up in a combination of mid-term and short-term LNG contracts, right?
Correct.
Right. So, sir, from a margin guidance perspective, given the way that prices have behaved both for term, medium term as well as spot, can we expect that this kind of margin trends will, barring any other issues with respect to pricing, can we expect that some of, this kind of a margin strength would sustain over the next year or so?
The margin is a function of a lot of things. As you said, gas costs, as far as APM is concerned, prices are going to be stable with the cap of $6.5.
Right.
HPHT availability as well as the HPHT contract already signed by MGL are good enough to, I think, have the availability of quantity. We see that minimal spot we will be using. We'll be also taking up any further HPHT if it is available through bidding in the next few rounds. Okay. So as far as gas cost is concerned, yes, and availability of gas is concerned, priority segment very well under control. As far as even INC is concerned, we have term contracts in place. Okay, almost for our full requirement. Okay, but there could be factors like availability of APM allocation, exchange rate, and if there is anything with respect to alternate fuel prices, petrol, diesel going down or something, we may think of taking a little bit hit on margin to sustain and continue this vehicle conversions. Okay.
Right.
So margins are expected to be properly, under control, as Rajesh explained. The other part to it is that we have sufficient legroom available. Around 13.29 is this quarter, and the 9 years is 14.83. So we are comfortable in that zone of having a proper margin, and our rates are also very reasonable in terms of other CGD companies in PNG and CNG segment. And all our major reason for fluctuation in margins were that earlier we were having a lot of component of spot gas, which was as high as $31, $32 per MMBTU, which has come down to $15 per MMBTU. That is the reason we are having better margins as compared to Q3 of last financial year.
Right, sir. So one last question, if I may. What was the proportion of APM in the priority sector allocation as a percentage right now?
It was roughly 78 to 80%. Okay. APM.
Around 78 to 80% was the priority allocation.
Yeah. And roughly almost 19.5 to 20% was HPHT, and balance 2% was spot.
Thank you very much for the detailed answer, sir. I'll come back if I have more questions. Congratulations again. Thanks.
Thank you. The next question is from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir, and congratulations for good set of numbers. Sir, your CNG volume grew by more than 6% on YOY basis. So considering this, will you increase the CNG volume growth guidance for the long term?
No, not really. Because what we have seen is, just a quarter-on-quarter kind of a thing, which may not be appropriate to extrapolate long term.
But the focus remains on CNG. We have launched recently some schemes for private vehicles and commercial vehicles. So private vehicle scheme has expired in end of December, but commercial vehicle we are still giving a lot of focus, and we expect that the CNG volumes will maintain the CAGR which has been the case for last few years, or maybe better to some extent.
Okay, and can you tell us about your CNG Mahotsav or incentives on the CNG conversion? How many new vehicles opted this scheme during the quarter, and are you planning to extend it for the next few months or quarter? Have you seen any more PV conversions during the CNG Mahotsav?
You're talking about both PV, passenger and commercial vehicle, right?
Yes,
CNG Mahotsav.
Yes.
In the passenger car segment, we witnessed an uptick of about 30% from what used to be the vehicle sales there. And the commercial segment, however, the base numbers itself was pretty low, but it is still taking some time for that impact to kick in.
As we are told, passenger vehicles, the CNG Mahotsav ended on 31st of December, whereas we are continuing with the commercial vehicle scheme, except for the small commercial vehicle, till 31st of March 2024. So
Thanks a lot, sir. I will come back in a few.
A part of that increase in the quarterly number of vehicle additions, which has gone up to 22,000 from 19.5, is partly attributable to this Mahotsav.
Thanks, sir.
Thank you. The next question is from the line of Maulik Patel from Equitas Securities. Please go ahead.
Yeah, this is Maulik from Equitas. Thanks for the opportunity. Few questions. Can you just give us an update on this acquisition of Unison? And we were hoping that expectation is that it will commence from the next financial year in terms of an approval and everything.
Approval of CNG with respect to transfer of control from Ashoka Buildcon to MGL, including the shares held by Morgan Stanley or North Haven India Infrastructure Fund, has come. We will be soon consuming the transaction, so it will be in our fold within this quarter itself.
Q4.
Okay, sir, yes.
And what kind of, given that you will be probably involved into this business of the Unison also now going forward, what kind of numbers which is Unison is currently giving? And update which was that at the time of the acquisition, which was almost 2-3 quarters back. Can you just update what kind of number Unison has been reporting now?
I think when we did the transaction or signed the SPA, they had 40 odd stations. Now they are almost 50 plus CNG stations. In terms of volumes today, they should be touching around 130,000 odd cubic meters a day.
Okay.
Most of that is CNG.
Okay. That was, I think, at that time it was around 0.1 MMSCMD, right? Around 1 lakh cubic meter when you announced the acquisition.
Yeah, roughly, yes.
More than 1 lakh now.
And the ultimate potential estimated was about
1.2 million MMSCMD, yes.
Okay. Sir, another, if you ask, in terms of, let's say, if there is a cut in a petrol and diesel prices at a retail level, what could be the strategy of MGL? Will you try to reduce the CNG price, or how would you like to play?
We'll basically first gauge the reaction from the market. If our sales volume increase is not impacted too much, we may not intervene. But if we see any slowdown in the growth, then we may take a conscious call to do something on pricing. But it's too early to say because we don't know whether prices will drop at all. If they drop, when will they drop? And if they drop, by how much?
To what extent it will get dropped. And PNG, you said, is not related to petrol diesel, so that is independent pricing related to LPG primarily.
Correct. And so now the spot has come down to around $9.5 per MMBTU compared to the 14-15, which was the average in the previous quarter. Are you probably looking for more volume growth in the industrial segment?
Which number you are referring to?
LNG has come down, so probably you have between your portfolio, the spot LNG is only 2-3% of the overall volume mix and a supply mix side. But as it has fallen such a kind of level, do you anticipate a more volume in a growth in the industrial segment?
We are basically cashing on this opportunity by offering our large industrial customers a discount if they consume more volumes.
But are you seeing that more industrial users are getting connected to the grid now than what they were earlier? Because probably the pricing was not in the favor from a gas perspective. Now it is little much, and it is better. More customers are getting connected and approaching you.
We are focused on industrial customers, especially in GA3, and there we are connecting to some of the customers, important customers in GA3 in Taloja as well as Patalganga MIDC. So going forward, we will definitely, the increase in the numbers of INC sale itself suggests that the number of customers also increasing, and the offtake of the consumers also by incentivizing them for a higher offtake is also working out. So definitely we are focusing, we are having our focus on the INC segment also.
Just to supplement that, about a year or so back, we were selling gas at parity to alternate fuels. Be it a new customer, old customer, whatever. But consciously for increasing our volumes and penetration, we changed that a year back, and we now guarantee a 10% discount for 3 years for any new industrial customer in GA3 and any new large industrial customer in GA2. GA1, of course, industry was negligible. So that has, we have added on almost 150,000 SCMD worth of contracts, part of which have started flowing, and remaining would flow in maybe a couple of quarters.
I think that's a sizable volume you achieved through this, the incentives or the price protection. The 0.15 SCMD, given the what base we have, it's a sizable number.
Not only price protection, but also the fact that connectivity was established in some of the difficult areas in Patalganga and Taloja.
Even in Khalapur side, we managed to get pipelines into the factory of Godrej and Boys and one or two customers.
So last question. Have you seen an absolute drop in APM volume from the government? Because I think you mentioned around 78% of the volume come from the APM side, right? But have you seen this number in absolute terms lower than the previous quarter?
It is lower than the previous quarter. Previous quarter was around 84% odd. This quarter it has hovered between 78-80.
And will it drop further in the coming quarters? Is there any indication from the ministry on the same?
No such prior indication comes in. The allocation comes in on a monthly basis. Okay, so probably the reduction we understand was maybe due to some production constraint at ONGC. Some of it may get restored also, but no formal communication exists.
But they are backstopping it with HPHT, so whatever priority requirement we have, getting from, if not APM, HPHT.
The CGD sector is also growing. So many companies are demanding APM gas. So going forward, it may come down slightly.
Sir, HPHT allocation is a part of the Reliance portfolio, right? And it
can be anybody.
One of the option of the MGL field.
No, it can be anybody. It is on the exchange also. And if everything else is equal, then CGD get priority for the priority sector, which is CNG and DPNG, and that's how we are getting whatever is required additional volumes from HPHT. Because today, even if we bid it at par with fertilizer and power, earlier the gas used to go to fertilizer or power because of their the huge volumes. But now government has given a priority for CGD if everything else is equal in bidding.
What could be your HPHT volume in terms of it's 0.1
priority or non-priority?
See, overall HPHT is only right now for priority. So we have signed up roughly 0.51.
0.51 is for the HPHT. Okay.
Thank you. The next question is from the line of Niharika from Equitas Investment. Please go ahead.
Thank you for the opportunity. So my first question is, has the MGL bid for the 12th round, which just got concluded for Northeastern and not?
Right now we are not thinking about it, but we are still. When is the date? Date has gone close. So we have not bidded for it.
So do we plan to bid for any further geographical areas?
अभी कोई बचे नहीं है. There are no such geographical areas left. This was the round wherein almost 98% of population is covered. Even these rounds were quite remote, like one in J&K, Ladakh, and Northeast.
Leh Ladakh, I think, didn't get a bid, so that is the only one left now.
So there's hardly anything which we expect will come on block.
So for our growth, are we looking for some other company who must have gotten the allocation to kind of come on the block and like Unison, and we might, bid for it? So do we have
that is a long-term thing. Actually, there is nothing in the market as of now which is, we are keeping a track and exploring and scouting for the opportunity. But as of now, nothing is there which is very substantial, because yes, you are right. Maybe after some minimum lock-in period is over, when people start to consolidate, so maybe a year or so or 1 or 2 years, we will find something. But the good part is Unison is going to be acquired in this quarter. The formalities have been completed we have received the formal clearance from PNGRB. We are in the process of completing some language and other issues related to the transaction document, which we will be completing this quarter itself.
Okay. And the other question is, PNGRB chairman, I think, had come and said that they are going to increase the competition for CGD players, and basically they would allow multiple players where the exclusivity period has ended. So what I understand is for GA1, our marketing and infrastructure exclusivity has already ended, and do we feel that a significant competition could arise in our geographical area?
See, that matter is still sub judice, so we don't want to comment on that. The PNG chairman, I don't know on what forum he has commented, but as of now, we don't want to comment on it because it is a matter which is sub judice under the Delhi High Court. Wait for the decision of the Delhi High Court and wait for the developments. However, if the exclusivity ends, it is a gain and loss on both the sides, because then we also will have an access to other areas where the access will be given to other. It cannot be on pick and choose basis, so it will be both a loss or a gain for all the CGD entities.
Right. And my last question is some update on this MOU with BMC. Has some substantial development taken place, and have you started something on it?
The discussions are undergoing with the BMC. We expect that the concession agreement, MOU is already signed last year. Now we are finalizing the terms and conditions for concession agreement and other related documents to land finalization, which we expect will take a month or 2 months before we can proceed in the transaction.
And from that date, it would take another 1 to 2 years to build a plant?
1.5 years roughly from the date we signed the concession agreement.
Okay. And how much cash do we have on our books as on 31st of December?
It was around 2,000 crore plus, but we will be using substantial cash for UEPL soon. Okay.
Right. Thank you. That was it from me.
Thank you.
Thank you. The next question is from the line of Vardharajan from Antique Group Limited. Please go ahead.
Thanks for taking my question, sir. I wanted to understand this promotion which we ran during the quarter. Will obviously, when they use the card, it will be charged onto the P&L. But cumulatively, what would be the amount broadly, just to get an idea what kind of an expense we should expect next quarter or following quarter?
Scheme CNG modes and next quarter. This and next is us.
Yeah. So for this schemes which we have roughly spent around 10 crores in this quarter, and maybe another 20-25 crore could be, if good response is there, we may incur. At least that is the budget we have kept for these schemes.
Around 20 CR could be this quarter, and 10 CR was in the previous quarter.
Cool. So as far as the delta in the CV sales is concerned, was it to our satisfaction? Because what I was wondering was that this is a very, very attractive scheme, but somehow 10-15% kind of an increase in sale doesn't really seem to be a big impact. So am I right in judging that, or do you think it is broadly along expected lines?
The commercial vehicle segment, the scheme did increase the number of vehicle sales, but the base number itself was so small that it didn't move the needle when you look at the overall CNG sales. And one primary issue which we are trying to deal with in the market, along with the OEs and MGL together, is many of the transporters, they have that worry in the back of their mind. The CNG prices just a year or two back, had crossed 89 rupees in MGL's case. In some GAs, it had touched diesel price, etc. So that we are working hard to dispel those kind of issues, and telling them that now with the government changing its policies and ensuring availability of domestically produced gas, we are seeing clear pricing stability at least for a few years going ahead. And of course, at current price levels, the proposition is quite attractive for them. So some of them are opting for it. The only thing additional which needs to be done is to convince them that they will have this advantage for a few years, and when you look at the total cost of ownership, it will be beneficial for them.
Fair enough, sir. Secondly, on the new acquired GAs, have you drawn out any plan in terms of investments, or should we look at some outflow in terms of investment next year and the following year?
Around 100 to 150 crore is expected to be invested in the Unison this year, 24-25.
Sure. And the similar kind of a run rate should we expect for subsequent years as well?
Actually, it depends. But once we take over the acquisition in our hands, we will thoroughly review about the minimum work program. But we are going to be aggressive in terms of capex, because we will like to have the basic infrastructure in place to take the leverage in coming few years. So yes, the investment, after our thorough review of the company and the availability, the financial strength and the expected growth, we will take a call on it. But yes, 100 to 150 CR is the numbers we expect year on year.
Thanks, sir. Thanks a lot.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equity. Please go ahead.
Good evening and thank you very much. So if you're looking at the Unison Enviro GA development, so when do you expect to complete the payment for the acquisition cost, and what is the current reading of the gas connectivity for the supply of gas to those networks? Are you going to use virtual network? Is there pipeline connectivity for sourcing the gas?
Payment is expected to be completed in 2-3 weeks' time. We are in the process of finalizing the documents, and this quarter definitely it is going to be completed. Related to the gas availability and connectivity, all the 3 geographical areas which the Unison has is already connected to the main grid pipeline of GAIL. So the gas availability in the main hub is available. The other transportation depends on the type of terrain which 3 GAs have. Like in Ratnagiri, mostly it is connected through daughter booster station, and other 2 GAs are connected through pipe grid also. So all these combinations which are typically available in a CGD company is being utilized, and also it depends on number of customers, industrial or commercial, or the CNG trucks and PNG. We decide the mode, that what is the most economical way of operating the GA.
Apart from this, just to add, apart from 3 CGS for receiving gas, they also have LNG facility in Ratnagiri, which enables them to take LNG at any point of time and cater to industrial customers as well. In a way, they have 4 points where they can receive gas.
Also the fact that the LNG loading facility at Dabhol is already commissioned or is about to be commissioned. So it will be advantageous if for the Ratnagiri GA to source LNG also from that Dabhol.
That is very near to their LNG station, maybe less than 50 kilometers from Dabhol.
In case of LNG, transportation cost from the LNG receiving LNG facility to your location is a bigger cost. So this will help reduction in cost. Currently they may be getting from Hazira.
We will relook at the procurement contracts and try to optimize on the transportation cost.
Okay. So in terms of the long-term potential, what is the reading in terms of the split between CNG and PNG in the 3 new GAs under Unison?
Almost 80% CNG. 80 to 90.
90% CNG.
Mostly it is CNG and PNG is being developed but not that much. Industry is also...
DPNG and commercial will be very, very low.
Industry will be there around 7-8%.
So for the CNG consumption, is there any number you can share in terms of the number of vehicles you have on the ground right now, including the floating vehicles which was discussed at the time of the acquisition? And secondly, what is the kind of growth you see in terms of CNG vehicle additions? Any ballpark numbers you can share at this stage?
I think I will come back offline on this because this week we don't have the numbers right now in that area. But just to give you maybe, we have 53 stations and around 27,000 vehicles in all the areas put together. At the time of acquisition, I do not have the data.
Okay. Just one last thought. In terms of your HPHP gas, tied up right now, it's about 17% of your overall priority sector volume, which you have reported in the third quarter. So if there is a 10% growth, that implies requirement of another 0.3 MMSCMD. So assuming that your APM gas allocation doesn't go up, how will you source the incremental requirement of gas for the growth in CNG and domestic PNG? Will you expect to tie it up from Reliance and then eventually ONGC, or will you have to buy LNG, or how do you see that sourcing strategy for the priority segment?
I think there will be some HPHT available in the next year also because there are some contracts which may be expiring and some HPHT fresh bidding also can come. Apart from that, we are even signed up other term contracts which we can always use here depending on how the Henry Hub index or Brent index is okay. So I think all options are available.
Just to add to that, I mean, if spot prices continue their downward creep for very short-term requirements, we can, take spot also and wrap back a bit on our other
term contracts. Because most of them have 80% or some of them have 60% kind of a minimum guaranteed offtake. So 40% can be done away and swiped with spot if required. And in some other contracts, maybe 10 or 20%.
But HPHT gas is expected to be put on sale for this year, this financial year and the next financial year also, because some of the contracts of older allocation or whatever contracts have been signed by Reliance and ONGC are expiring in this next financial year also. So that will also come for sale through the bidding mechanism.
That makes sense. Thank you very much and wish you all the best. I'll join with you.
Thank you.
Thank you. The next question is from the line of Vishnu Kumar from Avendus Spark. Please go ahead.
Thanks for your time, sir. So just following up on one of the earlier participants' question, if the petrol price cut happens, you mentioned that at some point we'll have a look at volume growth and decide. So in what we see currently is there is a 30 rupees price gap between petrol and CNG. What level of price difference do you think can have an impact on our volumes? And the second question would be, in the medium or longer term, at what level of per unit EBITDA where we would be comfortable to take a price cut? And how much would probably we be thinking as a medium-term target?
Look, as regards CNG versus petrol, the fuel cost in CNG is roughly half of that of petrol. The 30 rupees, is the rupees per kg and rupees per liter difference. but you get a 15-20% uptick in the mileage also. So in the running rupees per kilometer, CNG is almost, it's 50% cheaper than petrol. So even if petrol goes down by 5-10 rupees, we will not be seeing too much impact. But on diesel, we are currently at about 18-19% discount. There, if diesel prices go up, then potentially, that market, that volume growth could go down. But again, the share of the commercial goods vehicle segment in the overall volume contribution is that is relatively little. Out of the 22,000 vehicles which came on in the quarter, only about 1,500 odd were, commercial goods vehicles. So private car segment, the other three-wheelers, the aggregators, etc., we don't expect any impact on those volumes. And whoever is there on CNG, anyway, he will use CNG. So we will basically be tracking the incremental vehicle additions very carefully.
Okay. To put it differently, sir, at what level of additions, let's say if it comes below a certain number, will we go for a additional price cut? Or rather, at what growth, let's say if it's 2% growth only on CNG, then we'll take for an additional cut? Or any markers that we have to track so that we get some sense that, okay, this is a point where you will probably take us the additional cut. That is what we are trying to understand.
That is a strategic call, so there is no point speculating on that, because as explained, it depends on many factors, including the margins, the cost of alternate fuel, the cost of procurement, our growth, the number of vehicles which we expect, and the balance between all these parameters. So it is not a good idea to speculate on that.
Understood, sir. And what would be for the second question, what would be a medium-term EBITDA per SCM that we will continue to operate with? Whatever history we have seen, the decadal at 13, 14 rupees, this is the highest ever we have done. What would be a normative run rate that we'll work with?
I think you can't decide a run rate and decide that this is the EBITDA I want to earn. What probably any business should look at is how do you grow the absolute profit also year on year, along with how do you earn your reasonable margin on per unit basis. So one has to keep on doing trade-off between various factors and decide how do you want to grow. So one of the factors will be a resultant factor, which is EBITDA. So if you note, last year my average EBITDA was 9.5. Today I am having better EBITDA, but tomorrow to see whether my absolute profitability, turnover, etc. grows, I may take a cut on EBITDA and still work on a scenario or a combination which gives me good returns on my investment. So it's a very, very subjective question, and it has to be dealt at a point of time in a different manner depending on host of factors which actually culminates into EBITDA per SCM. Right?
But just to give you more comfort on that is that our CNG prices are one of the lowest in the country. Even the PNG prices are one of the lowest in the country. Cost of procurement has been optimized. So cost of operations is also some older assets are being replaced. We are running some schemes also. So as of now, 9 months, we are having an EBITDA of 14.83 against 8.4, which was there for the previous 9 months of the last financial year. So we have sufficient legroom available with us. With the schemes coming on place, we expect to get some growth also. And with the prices already being on a lower side, we expect that the EBITDA will be in safe range of around 10 to 12 is very safe to assume in the next year or so.
Got it, sir. Thank you.
Thank you. The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good evening, sir, and congratulations on good set of numbers. So I have two sets of questions. The first one is relating to UPL. Unison, so you mentioned that currently the volumes are around 0.13 MMSCMD. So what has been the growth like in the last 1 year for UPL?
Maybe around, they have grown from 1.2 1 to 1.33 or something. So it's a roughly 18 to 20% growth is there.
Okay, so 20% sort of growth is the current recurring growth which is happening for this company, right? Okay. Secondly, any profitability numbers, etc., can you share? I don't know whether you'll be able to, but is it possible to give 9 months PAT or EBITDA or something of that sort for UPL?
They are EBITDA positive, okay.
Yeah.
And I think once you get ABL results in public domain, you may be able to see that.
Next quarter onward, we will be doing the consolidation reporting. So in that, the results of UPL will also be declared along with MGL results. So just wait for the next quarter in the end of April or sometime that we will be declaring a
standalone and consolidated will be available. So you'll be able to make out what are the...
Right. And a few bookkeeping questions. First is, what were the industrial volumes for the quarter?
Industrial volumes for the quarter... 0.378. 0.38
MMSCMD. And what is the CNG volumes in kgs?
CNG volume in kgs is 1.937.
1.937 million kgs, right? Okay.
Yeah.
Excuse me. Okay. And sir, and what was the 9 months capex and full year guidance?
9 months capex was around 500 crores odd and maybe 750-800 crore by this year end.
Okay. Okay, so fair enough. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for giving this opportunity. I'd like to take this opportunity to understand some of the volume growth drivers for the next year. So I just recently understood we have signed 0.15 MMSCMD of the industrial contracts. Would you be able to bifurcate that between Ratnagiri and the other GAs? And going into FY25, what kind of potential that we can target in the GA3 as well as sort of the other industrial customers left out in GA1 and GA2?
If you're talking of industrial customers, currently we're only talking of MGL. We're not talking of UEPL or Ratnagiri.
And maybe you mean Raigad?
Yes, I mean Raigad, GA3, correct.
Okay, so volume will be roughly, maybe 60% GA2, 40% GA3. GA1 is actually industrial volume. There is degrowth because industries, whatever few are left, they are shifting out. But sometimes some of them shift to GA2, GA3, so we get the customers. For example, Godrej has closed down from Vikhroli, but they have moved to Ambernath. Some of it is moving to Khalapur, etc. So we get the same volume elsewhere. Industrial volumes and the other next year, what are volume drivers or something you're asking for? Again, a lot hinges on CNG, which is 3/4 of our sales volume. So for us to grow at 6, 7, 8% or whatever, CNG will have to grow at that rate. Industry, we are hoping will be a bit more. Industry will expect double-digit volumes increase. Commercial is it's business as usual. Kind of whatever 4-5% volume increase happens.
Just follow up on the CNG itself. So we have launched the incentive schemes this year, and this has probably added some of the volumes. So do you think that if we continue this or we'll give some sort of other incentives, would you be able to sort of grow above your historical growth rate by offering higher incentives? Would that help to grow into 6, 7, 8% range?
Yes, if we start getting traction in the commercial goods vehicle segment, that definitely will happen. And we are putting in all efforts along with, partnering with the OEs who are having factory-fitted goods vehicles, So we are partnering with them to give incentives and convince transporters to move away from diesel and into CNG. the good thing is, now there are more than 30 CNG factory-fitted commercial good vehicle variants available, right up to 18-20 ton gross vehicle weight range, which was previously not there. So the issue of vehicle performance of a retrofit, that we have managed to dispel from the minds of transporters. So they don't have that much of an issue on vehicle performance now because factory-fitted goods vehicles are available. But we still continue to work on the perceptions they have on the pricing. Hopefully over time, we should get over that barrier too, and the sales volumes increase will happen, because that is an underpenetrated market for us, the commercial goods vehicle segment. And those vehicles, per capita case sale of CNG, consumption of CNG is much, much higher. I mean, if you get one truck, it's equivalent to about 20 passenger cars. So.
Understood, sir. And in terms of the CNG station footprint, how many we have added in the 9 months, and what could we complete this year, and what would be our target for the next year?
This year we have completed around 10 in the 9 months period, and we expect around 45 stations to be added this financial year, and similar numbers are expected in the next financial year.
And in
the progress of CNG stations typically happen in the last quarter because construction time is there, land is there, permissions are there, and so many other formalities are required. So bulk of the CNG stations are commissioned in the last quarter of the financial year.
In terms of the addition of the new station is only part of the growth. Other growth will come from the sort of addition of the additional dispensers or sort of converting them to online. So if in terms of the compression capacity wise, what sort of the growth will achieve this year, and what could be the target for the next?
Compression capacity wise, we are at a pretty comfortable level because our station utilization or capacity utilization is only about 40% or so. So we are not expecting any challenge on that front. It is maybe for a couple of hours during the day if 50,000 or 100,000 auto rickshaws decide to fill because their shift is changing, there will be some peaking. But we have put in a lot of initiatives to increase customer awareness that there are many hours during the day in which they can comfortably come to the CNG stations, fill CNG and go without waiting. In fact, we are also tied up, we have an agreement with BEST, which allows us to send vehicles into their depots with a prior app-based slot booking where they can fill without waiting. So the BST bus depots have got infrastructure because we fill our buses during the night, and in the daytime the depots are empty and the infrastructure is idle. So it's a win-win for everyone.
And also just add to what Rajesh has mentioned is that 45 new stations are being added and almost similar numbers are being upgraded in terms of converting DBS station to online or adding dispensers or compressors. So in the existing compressor CNG stations also, we are upgrading the capacity depending on the requirement and the load on the CNG station.
So your compression capacity probably is increasing at more than 10%, whereas your sales volumes are going at 6-7%. But then we intend to pursue that because we believe that once you create the capacity, the demand will, pick up, and more people will get incentivized to switch to CNG because they will see it's readily available and convenient.
Right, sir. Understood. Just one last question on the capex front. So for FY25, would we be looking at target of somewhere in the range of 900 to 1,000 crore of capex, considering 700 to 800 run rate on the existing GS, and additional 100 to 150 crore on the Ratnagiri GS?
Yeah. I mean, 800 odd in the Mahanagar gas and around 100 in the UPF, 100 to 150. So putting together, it will be more than 900. Expected to be more than 900.
Thank you, sir. Thanks for the clarification.
Thank you. The next question is from the line of Soumya from Avendus Spark. Please go ahead.
Thanks for the opportunity, sir. The first question is on the HPHT gas. So the HPHT gas that we procured, we'll be getting at a price closer to the ceiling of $10 per MMBTU. Would that be right? The entire.
So it is around 9.96 MMBTU from October this year. Earlier it was 12.12 prior to this.
Correct, sir. I was asking more from, I think we require probably last quarter, we require around 0.6, of which 0.5, I think you mentioned as long term. In this long term, what would be the linkage? And the linkage price leads to above ceiling, so we have been getting at a ceiling price. Is that right understanding?
Yeah, we have been getting at ceiling price all this time, yes.
So the long-term contract that we have on 0.5 of HPHT, what would be the linkage, sir? It will be linked to LNG prices?
The ceiling HPHT prices with a formula which have a ceiling of 3 different fuels, and the lower of the 3 is considered. So it is around $10 per MMBTU as of now. So whatever transactions we are getting till 31st March will be around $10 per MMBTU, and next year it is expected that it will be in the similar range or maybe slightly lower than that.
Okay, got it, sir. Sir, also these conversions which we have been seeing increase from, say, as you said, 15,000 to 22,000. So when we are thinking about a mid-single digit growth in our existing GAs, so what would be a conversion number that we'll be thinking at as a good number in this context of 15 to 22,000 range?
The numbers we have been traditionally getting was 80,000 also in some of the previous years. Last year it was 65,000. This year in 3 quarters we have touched almost 60,000. So we expect another 20,000. So around 80,000 we will be touching this financial year. Next financial year, the impact of the schemes which we have launched, and we will have a reassessment after the end of this financial year, and we expect maybe around 80,000 to 1 lakh vehicles should be added in the next financial year also.
Okay, got it. So one last question from my side. So on the earlier you used to give on the industrial and commercial segment the alternate fuel prices. So if you could just help us with the Q3 and Q2, the alternate fuel prices.
As far as LDO and FO is concerned, compared to last quarter, this quarter there was a better realization. LDO was 61,350 odd per KL, which has gone up to 72,000, and FO was 47,500 odd, which went to almost 52,800. Whereas in case of 19 kg LPG, it reduced from 1,700 to 1,641 this quarter. Yeah.
Got it. Thank you.
Thank you. The next question is from the line of Ronak from Robo Capital. Please go ahead.
Hello, am I audible?
Yes. Yeah, yes.
Yes, sir. Most of the questions are clear. Just want to understand, like, the natural gas prices are currently lower, like corrected 20 to 25%. So how do we see the impact of it on our business? Does it increase the volume of our business, or what about it?
I think 22% is what? We could not properly get the question.
Gas prices have generally
I was asking, like, natural gas prices have come down by 15 to 20%. So how do we see its impact in the volume of our business?
It has improved the margin to some extent.
Yeah.
Again, the connected customers continue to take how much ever gas they need. And to some extent, your volume increase is also a function of how much infrastructure you can roll out and how many more PNG customers you can connect and how many more CNG stations you can open up.
Another way to look at your question is that the LNG prices are linked to our industry and commercial segment, because our CNG and PNG segment is catered through APM gas and HPHT, which is not directly linked with LNG prices. So coming to industry and commercial, again, it is a variety of factors like what is the alternate fuel. So we have different segmentation of pricing in different segments, and therefore, it makes an impact on our pricing methodology and the profitability. However, our dependence on the spot has come down substantially, which was a major indicator in last financial year, wherein we were purchasing a lot of spot, and that used to give a lot of volatility in our profits, which is now much more stable.
And of course, the government's policy, which came in February last year, also helped, where they started giving HPHT on priority to CGD.
And the term volumes are mostly linked with Henry Hub, which is a very stable index, and not much of variability happens in the Henry Hub index.
Okay, got it. Thanks for that.
Thank you.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Yeah, thank you very much for this. Just on the LNG station additions, what is the kind of cost you are likely to incur in the second half of this year, and how do you plan your capex, and what is the kind of visibility on volumes and the top line we can expect from the LNG sales, say, over the next 1-2 years?
It's a very small, minuscule number because only one LNG station is working in Savroli. So the contracts have already been signed up with the suppliers in terms of procuring LNG. So we are signed contracts for selling LNG on B2B segment as of now. And volumes are low, and the impact on the total financials of the company will be minuscule.
Okay, and then what is the information you can share on the margins on the industrial and commercial segment, or the selling price, to get a sense in terms of how it impacts your overall EBITDA per SCM? Would it be close to your blended EBITDA per SCM or slightly higher, given the fact that the alternate prices have gone up?
If you look at just now, sometime back I said how LDO and FO prices have moved. So this quarter the margins were good. Okay. Had this improvement not happened, maybe the 3 rupees reduction in CNG would have brought little bit my sales realization. But industrial has helped in this quarter. So, we can talk about whether we sell at parity or how much discount to these alternate fuels. But to give a number is slightly this. But this quarter, more or less, realization is slightly more compared to maybe, domestic and CNG prices. In case of commercial A and commercial B, industry is more or less in line with average sales realization of priority sector.
Thank you very much. That was helpful, and wish you all the best.
Yeah. Thank you.
Thank you. As that was the last question, I would now like to hand the conference over to Mr. Yogesh Patil from Dolat Capital for closing comments. Please go ahead.
Thanks a lot to Mahanagar Gas Management for such a detailed answers to each question. Thanks a lot for your time, sir. Now we will conclude the call.
Thank you, everybody, for